Hi, this is Jim Welsh from macrotides.com. Thanks for tuning in. Well, I've been discussing many of the factors that were tailwinds which boosted global growth over the last 20 to 40 years. And in many cases, those tailwinds are becoming less strong and actually reversing. The next one I'm going to look at is the level of global debt. The Institute of International Finance calculates that as of March 31st, 2019, worldwide debt totaled $246 trillion. That's nearly 320% of global GDP, and it's up about 20% just since 2012. This figure includes non-financial corporate debt, in other words, no bank leverage in there, government, financial, and household debt. The graphic illustrates how debt has increased in each of these sectors since 1997, 2007, and through September 2017. Through 2017, government debt jumped 50% as a percent of global GDP, rising from 58% to 87% as governments increased deficit spending in the wake of the financial crisis. Household debt barely grew as mortgage debt fell due to the housing crisis and the defaults that resulted, and financial debt was held in check as banks bolstered their balance sheets, especially in the United States. Global debt continues, though, to reach record heights, so the risk of reaching a tipping point where there is simply too much global debt is drawing closer. Although global debt only rose 18.4% from the end of 2012 through March 31st, 2019, debt rose by 27.5% in the U.S. and soared by 140% in China. China's total corporate, household, and government debt rose to 303% of GDP in the first quarter of 2019. Since the financial crisis, the largest contributor to the increase in China's debt burden has come from the corporate sector. Since 2008, China's corporate debt as a percent of GDP has increased from 85% to 150% as of March 2018, and is the highest of all the major economies. The disparity between corporate debt levels in China and the rest of the world is likely due to the state-owned banks in China lending aggressively to state-owned enterprises in China. China has long subsidized state-owned enterprises with loans with low interest rates to provide them a competitive advantage in a global economy. Although this type of lending is in violation of World Trade Organization rules, China has persisted in this practice. In the U.S., corporate debt as a percent of GDP is at its highest level in history, at 47%, and has generated a slew of articles expressing concern since a peak in corporate debt has preceded each of the last three recessions in the U.S. This is a legitimate concern that will be unmasked in the next recession as debt ratings are lowered, default rates rise, and a slew of companies find rolling over their debt difficult. It's worth noting, though, that U.S. corporate debt as a percent of GDP is just 1/3 the level in China. During the last 25 years, consumers, businesses, and governments have increased their level of debt, which has effectively pulled demand for goods and services from the future into the present. The huge increase in global debt levels in the past 25 years lifted global GDP to a faster pace than it otherwise would have been. However, the absolute level of global debt and the diminishing boost to economic growth from each new dollar of debt suggests the increase in the growth rate of new debt will be less than in the past 25 years. With debt powering less growth, global growth will also be slower in coming years. And this is another reason why global GDP growth is likely to be lower than it has been over the last 20 to 40 years. Thanks for tuning in. May something good happen for you today.